There are a million and one ways to look at the market, but whichever way you decide, just make sure you understand what you're looking at. Today is 27th of January, and just like that, the first month of 2026 is more or less over. And today being a Tuesday, right? We are approaching where the market should get a bit more volatile. Of course, we saw some heavy moves going into the end of last week based on the fundamentals, especially. So, what are we expecting today? Now, don't forget, my levels are being drawn thanks to the indicator that I was able to create. It still has a little bugs, but hey, it's working fine for me and it's making trading a bit easier for me. And of course, my EA should be out in a bit, right? So I'll give you more information on that. But let's quickly go over like the major currency pairs that I watch, including the DXY, right? And you can see I have these two rectangles here and they're showing like blocks. Don't forget, you could look at the market in so many ways. I could look at the market in another way, even uh, uh, using trend lines, right? Like chart patterns. As an example, I could have something from here where I'm picking these 2 points, these two highs over here, and then I drag it here to have something in this manner, and then drag it here as a form of extension. That means that where the market is now presently playing around this extended level, if this here should fail, and it's coming back to these lows. So this would be like a threshold, like a last minute or a, how will I put the English? This is more or less like last card. Like if here fails for the buyers, then it's coming down to this point here of support where we look for fresh buying here as well. And then also based on this second, because this is the first rectangle we have here and then the second rectangle here. Based on this rectangle, this box, you could also pull back to this area here where we have a form of resistance and then drop further down. There are so many things that price could do, and I really don't want to confuse you, right? And that's why I would always say keep it as simple as possible. And that's why most times, right, what I normally have on my chart are just my major horizontal lines, meaning that here being support, here being resistance. What I would like to see is price pull back to this area here and then either bounce as support or break it and then pull back here, which should now act as resistance and give us a further drop. Another thing I want to state now is that as this is the more or less the end of the first month of 2026, January, what you could do, you could look at the higher time frames as well. I like the hourly time frame, right? It gives me a lot of actions and it also gives me a higher time frame perspective. But at the same time, you can switch to 4 hours daily or even the weekly time frame to have a good understanding of directional bias. Directional bias also based on what happened last year, right? Maybe in another video, we'll venture strictly into like the dailies, weeklies, and maybe even the monthlies. But we might probably focus on the dailies and the weeklies and then give you a higher time frame perspective of the market, which could use for the lower time frames as well, right? Very important. Now, as we are even looking at this Euro USD, I'll just clean this up real quick. As we're looking at the Euro USD, don't forget one major thing that all traders need to do is check the calendar. Don't forget the calendar is very important. Why? Because it holds information based on the fundamentals, based on news, based on high impact news, based on things that could create volatility all of a sudden in the market. If you're a technical trader and you're just looking at your support resistance or whatnot, whatever you're using, and then the next thing you place a trade and then it goes the other way in a heavy manner, or whatever the case might be, even goes in your favor in a heavy manner, you need to understand that most times than not, it is based on high impact news that came about, right? So if you look at what we have right in front of us here, you see that Monday, there was practically no high impact news because we only have the reds, which is for high impact news. Today, Tuesday, nothing as well. This doesn't mean that the market might not move in a volatile manner, right? But this just gives us a heads up that more or less it might be a quiet one. But looking at tomorrow, Wednesday, January 28th, you look closely, you can see for the Australian dollar, especially for the Aussie, you need to be careful as the CPI will be dropping early in the morning, early in the Asian session. That's about 1:30 a.m. This 1:30 a.m. is for GMT time zone. Whatever time zone you are in, or you're using, you always click on the time here and change it to your time zone. As you can see, GMT +1, right? So be careful if you are trading the Australian dollar, because as I said earlier, you could be a technical trader and then the market explodes on you and you're wondering what happened to the AUD. This will be the reason come tomorrow. And then look at the other things that we have as well. Okay, we have some other things as well tomorrow, apart from the AUD. We have for the card as well, the rate statement, as you can see for card, and also for the USD FOMC. I'm sure a lot of us are familiar with the FOMC, the Federal Open Market Committee statement news that is always released. It's always high impact as well. So expect volatility here. So basically, the calendar is just to pay attention to when most likely we are going to have high impact news come out in the market and will create that volatility. So looking at what we have further on, like GBP USD, follow GBP USD, you can see that it's pretty much similar to the Euro USD we're looking at. And I'll give you some more places to look at. I have one here as a form of untested support. I have another one somewhere around here, right, as a form of support and resistance, right? But more or less as resistance, as you can see, it played a big role on resistance here. Didn't really get to this point here, but we could still call it a support area here. It made a little mess here and it pushed higher. So that means, right? Also, because we're looking at Euro USD and GBP USD, what's the common instrument, or will I say currency? What's the common currency there? That's the USD. So we'll also be looking at the DXY. In your own broker, it might be the USD index, right? Or whatever. So this here, as you can see, you could come here, drop to this support, mess around a bit, because today being Tuesday, we don't really have any high impact, and we could have a break, pull back here as resistance, and then we have a further drop. If this is the case, I'll be looking for entry here on resistance to take it further down. It looks like we have, more profit that could drop, to the downside. But don't get me wrong, here could also be support, and this could also push higher and break out of this resistance point here and then push higher the more. Use here as a form of support, fresh support, and push higher as well. You need to always keep it simple. The simpler, the better, because it's either yes or no, it's either up or down. It could be sideways for a while, but at the end of the day, it's going to be either up or down. And up or down, most times, as we just said, volatility wise, is usually based on the news. Like this whole move here, if we check last week, I believe this was last week, Friday, you notice that we had high impact news that came out for the USD, and then we had this massive push to the upside for the cable GBP USD. So for all of these instruments we talk about, like Euro USD, GBP USD, they're majorly based on the USD index, which is also known as the DXY in other brokers. You can see all of them have this similar look to it, and you can always put in your further levels, right, based on, when you look to the left-hand side, you have your support, some support over here, yet to act as resistance. So here is untested, right? You can see it has gotten more or less to this area of resistance. So let's see what happens if it's a bounce or a break, act as support and push higher. Remember we said it's either up or down, right? Or it's either whatever the case may be, yes or no, and so on. Right, so you could always check some other instruments. This is USD card, check some other instruments, USD, JPY, and then you would always see things happening already based on here being a support yet to be tested as resistance. So we could easily have fresh sellers over here. But pay attention to the full story. You can see that we're paying attention to the USD index, the DXY, and using this for the major currency pairs, we have our bias for this week. Now, I will give you more information based on what happens to this area here of resistance or this area here of support, because it could either be a bounce or a break. So I would be wrapping up this video. If you have any questions, feel free to ask. We try as much as possible not to make it too lengthy, but we want you to understand what's happening in the market so that you could obviously be in tune with the market and, of course, take advantage. Don't forget, do not give up. Sky is the limit. Even if you are not yet there, always look back, especially during the weekends, and find out what the issues are and see how you can fix them. Okay, so thank you guys. Trade safely. If you have any questions, feel free to ask, and I'll be here to answer. Okay, cheers.